So much of your background has been in advisory over the years. Right now, in 2015, if you had to advise clients who are near retirement age to invest in VC, PE, or hedge, which would you recommend?
I'd probably do hedge because it's easier to get your money out. It's a little more liquid in that context than VC money would be or private equity money would be. But having said that, I'd also say, okay, what I'd really be looking at now is something that's not correlated with the stock market. If you look at Robert Shiller's data out of Yale, he's basically saying, okay, my PE is 27 right now, price to earnings ratio, and my median PE is something like 16. So the market's way, way overvalued. So I'd be worried about, all right, if I have a large portion of my investments in equities in the stock market, I want something else that's not correlated. So maybe I look at that space between private equity, hedge funds, venture capital funds. I find an investment that's not correlated. Maybe it's nursing homes. Maybe it's agriculture. Something that, regardless of what the market does, I'm going to go the opposite way.
You mentioned you've been in the classroom for well over 30 years. If you were counseling an undergraduate who wanted to have a career in finance, the focus of this episode is decoding the alphabet of finance, VC, PE, or hedge as career prospects.
Oh, that's a great question. I would probably say VC. I just think when you look at what goes on in Silicon Valley, Cooperstown, and so forth, there's so much opportunity out there. I'm out there regularly for students, and I think a great background too for these students would be a business background combined with an engineering or technology background. When you really look at what's going on today, there's a lot of money being made in the technology space. But you know what? In the future, I think it's going to be healthcare.
So are you suggesting that the returns are going to come from good management to go to alpha, or would it be a venture capital or a hedge fund buying and selling the stocks of healthcare companies?
Well, probably both. I think you could play the stocks, because if you go back and look at what's happened since Affordable Care Act was put in March of 2010, the healthcare stocks have done terrific. The pharmaceuticals have done terrific. But then when you look at the internal management of those companies, they also have to be entrepreneurial in the way they're doing business.